Hi everybody, this is Dan Sheridan. Today we're going to talk about a high theta iron condor. And I'm looking at SPX here today, and this is going to be one of the strategies we're going to be talking about in our new 3-week iron condor class that starts this Thursday. You can check it out at Sheridan Mentoring. But here's an example. This would be a 10-day high theta iron condor, and you could look right now, kind of a pause from this up move. In the SPX, we're at 39.10 right now. Today is Tuesday, Feb 9. Early in the morning, SPX is down about 5 points after being relentless for the last 6 days. Option volatilities are relatively in the lower end of the range the last 8 months. VIX is around the 22 level. And so what I'm looking at, again, what I'm looking at on this trade, it's a 10-day trade. And an iron condor is simply a call credit spread out of the money and a put credit spread out of the money. So it's a probability trade. It's a range-bound trade, income producing trade. We do it for a weekly income. Here's again an example of a 10-day high theta trade. And we're selling with the index around 39.11 SPX right now. I'm looking at selling the 4,000 calls in the Feb 19 expiration, and then just buying my hedge at the 4,010. And then on the downside, selling the 38.05 put, and then for my hedge, buying the 37.95 put, all in the Feb 19 expiration, about 10 days out. And you can see this is the range. With the price here, the range we make money. And as we start moving towards these short strikes, you know, we'll teach risk management. What do you do? And kind of what's the game plan? You know, the credit on this type of trade is near $2.50. Credit is what you bring in. Your margin or risk on the trade is going to be about $750. How'd you get that? Well, the difference, if you look at the widths of the strikes in the calls or the puts, it's 10. So your risk when you're doing 10 wide credit spreads is going to be $1,000. We're only doing one in this example. Less the credit of $250, which would be $750. So if I'm looking at, hey, let's just say I want to make 10%. Or whatever the numbers, 10%. It's not of your credit, it's of your margin or risk. So 10% of $750 would be $75. So if I sell it for a credit of $250 and I want to make 10%, I would buy it back at $1.75 debit. Sell it at $250 credit, buy it at $1.75, then I'd make $75 per contract. Divided by your margin of $750 would be about 10%. Now your potential yield on this high theta trade, if you look at our credit is $250 divided by our risk of $750, your potential yield is about 33%. Now, generally I put these on, you know, today is what, Tuesday? If I put it on today, Tuesday, again, my goal is to put one on every week. So I'd be out by probably next Monday, and the goal would be put one on every week. But anyways, this is one of the types of iron condor methodologies we'll be sharing in our 3-week iron condor class starting this Thursday. Check it out. You can go to SheridanMentoring.com and get more information. It's a 3-week class. We meet an hour, at least an hour each session, twice a week. So it'd be about over 6 hours. It's all recorded. So if you're not there, it's recorded. You can ask. We have like a class page for you. You can ask me questions, and you can review this material. You'll have access to it in the PowerPoint slides that accompany it for months after the class. So this is just one of the iron condors we'll be looking at. So thanks, everybody. Look forward to seeing you this Thursday. And again, today just went over the short-term high Theta Iron Condor for weekly income. Thank you.